Hello, everyone, and welcome to another podcast of the Loan Officer Experience. Thank you for being here. Today, we're going to be sitting down with my main man, Haik Avanesyan, who is with Cake Mortgage. He is the VP of TPO Sales. He's going to be reshaping the non-QM, leading guys. Haik, I think you guys are leading the Cake Mortgage. You're leading the non-QM retail space. In my opinion, you're one of the leaders in this arena, and I know you got a lot of information that you can share with me and our listeners, and really take us through why brokers should be paying attention to the unique opportunities in regards to your programs of the non-QM world. Without further ado, ladies and gentlemen, Haik Avanesyan, welcome to the show, my man.
Thank you, my brother. I appreciate you having me here, KT. And you got it right. You got it right on the first try.
I got that name. I hit that name right, didn't I?
Absolutely nailed it.
Yeah, it's definitely different, man. I'm sure you get that often. But
I've heard every pronunciation you could possibly imagine on my name. So
yeah. I put effort in that, baby. I put effort in that.
And that's why I always appreciate you, brother.
Well, man, let's go ahead and jump right in. Why don't you share with us, for the listeners who might not be familiar with Cake, what is Cake Mortgage?
So Cake Mortgage is a wholesale lender. We do all types of loans. We do VA, FHA, conventional, but what we're really known for is our non-QM. I'd say vast majority of our lending is non-QM products. And, I'm just grateful to be at Cake. I think it's an incredible company out there. And we love to lead the way, innovate, and launch some products that are that are really shaping the market. And just giving brokers more accessibility to more financing options and being able to say yes more to their borrowers.
Yeah, well, I've been using you guys for a couple of years, and the loans that you've been able to get done, and you really have helped me come from dabbling into the non-QM world to feeling a lot more confident about going, head first and reaching out to those consumers in my community that all my local banks are saying no to, some of the unions are saying no to, and oftentimes a lot of the traditional financing are saying no to. And so I think it's a huge market. So answer me this: what makes Cake different from the other wholesale non-QM space lenders that are out there? What do you think separates you guys from the competition?
I actually get asked this question a lot, especially at conventions. They always ask me, what makes Cake so different? And it's not the catchy name and the cute products like cheesecake, coffee cake, all those things we call our loans, but which
are all true, by the way. You on it 12 bank statement loans with like something cake tied to them, and I thought, man, at first I thought this can't be real. Come to find out it was.
Yeah.
And now it's kind of grown on me. But go ahead. I didn't mean to interrupt.
It grows on you for sure, especially if you have a sweet tooth.
Yeah, exactly.
But this is a very common question that I get, and I think it all boils down to our people, honestly. I mean, when we first met, KT, I think we only had like 40, 50 people total, and we're now well over 250 people. And what really makes us different is the people we employ, right? Like, for example, let's take it down to just the most basic. The person that the broker is face-to-face with almost every day is the AE, right? And at most companies, you speak to an AE, and they're really just giving you just customer service. And that's really, really what it boils down to. It's not really too much knowledge based. They don't really know the product. They have to check the guidelines 24/7 to get an answer and all that, and which is great. But it doesn't really radiate confidence, right? But when you speak to our people, every single one of them used to be a loan officer, right? They all were loan officers in the past. They've all been processors in the past. They have real life mortgage experience. They've dealt with the customers. They've dealt with the realtors. They've dealt with the CPAs or attorneys that are referring our broker's business. So they know exactly what it's like. I mean, for lack of better words, to be in the trenches, and they know exactly what it's like to, have expectations from consumers who don't really know what it's like in the mortgage side of the business. So when they're working with you, they've got that urgency on their mind, right? They know, hey, KT's got a loan. He's trying to impress a realtor. I really got to make sure KT's able to pull through for this realtor, right? So KT can get more business, so we can get more business at the end of the day, right? It's all reciprocal. So I would say my people, man, they stand out. They put in hard work. Like my AEs, day and night. You call them at midnight, they'll pick up their call. You send them a text message, they're answering their text messages. And on top of it, they have the product knowledge. So, you know, a lot of people say it's their products, and I love to say that, hey, we have some of the best products out there and we have some incredible rates. And, you know, if you work with us, you'll know. And if you don't, I hope you sign up and you'll find out. But I think what it really boils down to is people love their AEs when they work with us.
Yeah, I couldn't agree with you more. I know Blake is my AE, and that dude is, I mean, Johnny on the spot. I feel like he picks up that phone on the first ring for me, man. I was like, man, did
Yeah.
you do that shit on purpose, bro? Like just to like really get me, is this for real, you know? And so he's definitely been great. And I have referred him out more than anyone in the space. And I mean that, like I've sent so many people to him. It's like, hey man, because
Yeah.
you know, there's a lot of, I don't say there's ignorance. It's just a lot of unknowns. I guess it is ignorance that loan officers have about the non-QM space. Um, and I think that, you know, they've maybe have dealt with it in the last 2 years, just to see, say in 2 years ago, well, it's evolved so much, even in
Big
two
time.
years, you
Big time.
can't, yeah, if you kind of dabbled in it and you didn't have a great experience, I would say, hey man, you might want to go back because I think that the evolution of non-QM has definitely gotten better. It's grown
Mhm.
a little bit more data that they can make informed decisions based upon income and
Absolutely.
how people are paid. So kind of goes into my next question is, you know, what is Cake's core mission when it comes to supporting brokers and loan officers?
I think really the truth behind it is the core mission for Cake is how can we help brokers win more often, right? I mean, that's the reality behind it, you know, and it's like when we were brokers, you know, we used to work with UWM, right? All the time. They were one of our favorite lenders to work with. And
Yeah.
I remember when our AE there was telling us, hey, how can we help you win? So, you know, being a part of, you know, like now evolving from being a broker to a retail lender to now becoming a wholesale lender, you know, that mission stayed with us. Before it used to be, how do we help our customers win? How do we help our borrowers win, get into the house they want, get the loan they want, whatever it might be. Now that I think about it, I'm like, you know, as a company, our mission has always been, how do we help our brokers win more often? Because the more often our broker wins, the more often we win, right? So when you base your company's mission on the success of your people, on your brokers, it's inevitable for you to be successful on your own, right? And non-QM is a growing space. You're right. I mean, there was a stigma behind it many years ago. You know, people saying, "Oh, this isn't Fannie Mae, this isn't Freddie Mac, this isn't conventional lending." But you know, I think the data has proven non-QM is here to stay. You know, as it's been growing and more brokers working with us on a daily basis, with you know volumes increasing, with the more you know likelihood of a non-QM loan even happening in the first place. You can tell you know brokers are winning more often by using non-QM products. Instead of having to say no, now they're able to say yes. They're able to turn around and say, actually, we do have an option for you. We could do this for you. So, you know, if you're, you know, the core mission would be for Cake is, hey, how can we help you win? How can we help you say yes more often? How can we help you be more successful?
Yeah, that's great. It really leads into my next question is what kind of, you know, knowing what success a lot of your clients are having, your loan officers or brokers, there's still a lot of loan officers out there that don't know. So what kind of borrower profiles or use cases are most brokers overlooking right now that they can start looking at in, you know, inside of their business
Mhm.
to get more deals closed?
I think the simplest one that I can tell you is the self-employed individual, right? I mean, everybody knows how it is. You know, everybody knows how it is in the US, right? You have to file your taxes. You can't get away from them, right? And you have two options. Either you file them and you pay a ton of taxes, or, you know, maybe you have some deductions or whatever it might be, and your taxes aren't really a true representation of your income. And if that's the case, then you really don't have an option with conventional or VA or FHA lending because they go off of your tax returns, right? So the simplest borrower profile will really be the self-employed individual who, you know, their bank statements may dictate a completely different story, right? You know, and or the 1099 employee, the real estate agent, the you know the barber shop, you know the barber at the barber shop, the Uber driver, you know the gig worker. All of these people are so overlooked. They're not being given an opportunity to get their you know financing for the home they want because they're being able to use the tax you know the tax laws that we have in the states to be able to, hey, take deductions for this, take deductions for this, take deductions for whatever it might be. And then next thing you know, their net income is not their true representation of their actual income. So
Yeah.
that's an extremely overlooked market right there. I would say that's number one. Second most overlooked, and I think this might be a little bit of an intimidation factor for most LOs, is the investor, the investor is a very, very overlooked category because Fannie Mae, for example, allows 10 finance properties, right? So, and it's not easy doing a full doc loan on somebody who has multiple properties and they want to buy another property for cash flow or whatever it might be. So we have a DSCR product that's perfect for them where you judge the loan based off of the performance of the property itself rather than, their entire portfolio of properties or anything else they have. So I think there's a lot of overlooked niches in the non-QM space, whether it's the self-employed individual, the gig worker, the foreign national who wants to get a loan, the investor, whatever it might be. It just opens so many more doors for the LOs.
And I think that a lot of loan officers look at those types of transactions from the past, and it's just been so difficult to get those things done that they just ignore them.
Yeah.
And I can tell you, even for my team, it's taken me about 2 years to really train their brains to, they go traditional first and they're like, we can't do it. And I'm like, okay,
we could.
And they're like, oh, and now they're like, oh, so I already went to the bank statement program or, the DSCR route or whatever it is and I've already gotten it approved, right? Or gotten it
Absolutely.
to be approved. And so, and a lot of times you guys have been really good about like looking at income prior to even getting, a full file submitted, which is extremely beneficial if you have all the information, because then we can feel comfortable about going in and giving them an answer and feeling confident about it. Because that's the other big thing is I think that a lot of loan officers, they don't set up proper expectations. It's a non-QM loan. They've gotten substantially easier to get done and to get to the closing table. Every file's different. You've got to look at it differently. You've got to make it make sense. There may be a few things outside the box that we may or may not have to get, but that's part of the course. There's still loans that are getting closed every single day that in most cases wouldn't get closed anywhere else. I always, use the one that you guys got done for me. This guy went to 5 lenders, man. That's big. That's big time. And I can tell you, you know what happened from that? That agent that referred me that transaction, I bet they referred me 4 or 5 traditional files from that.
Exactly.
I wonder how much production you guys produce that, because of the non-QM products you're able to help loan officers with and get their files closed that turned into other loans, right? And it's just crazy that you guys are, able to increase business. I can tell you that the non-QM part of my business has probably gone up. It's probably in the 30% range if I was just guessing.
I love it.
Isn't that crazy? I mean, 2 years ago, no, man, 5% or less. And so it's just keeping your eyes and your ears open to the possibility. And the ones that we've always discounted, we've got to stop discounting those clients and those borrowers and thinking that it's just going to be a waste of time, because you'd be pleasantly surprised what Cape Mortgage can do. So that goes into my next question. What kind of data are you guys showing how non-QM products are performing? And, why should loan officers pay attention? Maybe if you've got some data from even production you guys have done, that'd be great as well.
Absolutely. I mean, the fact of the matter is a few years ago, non-QM was 1% or less of the market, right? So you have to imagine 99% of the loans happening on a day-to-day basis were conventional, VA, FHA, whatever, right? Now that number is 9% of the market, 8.7% or so, right? So that's only in 4 or 5 years. It's gone up to 8 to 9% of the entire marketplace. And that's I don't even want to talk how many hundreds of billions that is on an annualized basis, right? So I can tell you, Cake's been in inception for about 2 years now, roughly, on the non-QM space. We've been very fortunate. We've been very lucky to have an incredible operations team and really great AEs as well that are good at bringing in business and maintaining relationships that we've been able to produce at a high clip for a long time, right? So I think we ended last quarter, we ended Q3 with about 900 million funded in non-QM. So roughly about 300 million monthly. We are expecting to finish Q4 at about 1.2 billion, in non-QM alone. And I think, when you compare our year over year, compared to last year, we're at a 285% increase in non-QM volume. So, we've been very fortunate. We've been very happy, but we've only been able to get here by being able to put the brokers first, right? I'll put it this way. When you call an AE, and an AE like Blake, for example, if he can't get an answer for you, it's not a, hey, give me a few days. Let me go to my credit committee. Let me figure it out. Let me talk to a couple people and see what's going on. No, it's let me turn around. Let me walk over to Haik. He's my SVP of wholesale. Let me figure out what could happen. And if even Haik can't figure out an answer for you, we're going straight to the CEO, David. And David is an incredible man. I mean, I know you met him before too, KT, but
he is a great guy.
Young guy, loves to be involved day to day. He's not keeping himself distant from any of it, right? He's involved every single day, whether it's on the sales side, whether it's on the operations side. He's making sure that our brokers are put first, and the data shows it too, because you're able to see our numbers are increasing, and it's not just ours; it's just the entire market in general, right? So being able to say yes more to your brokers, and then the brokers being able to say yes more to their borrowers, it just keeps bringing. It's a revolving door. It just keeps bringing in more and more business.
Yeah, I love that. I think that there's still loan officers, man. I just do. There are people out there, and let me make this point too. Even consumers that have come to me sometimes that were at a retail shop prior to coming to, on the wholesale broker side, and they say, "Oh, I've already tried the bank statement loan with," and I always ask, "Well, who was the lender you were talking to?" And they usually respond with a retail lender name a lot of times.
Yep.
I'm like, "Oh yeah,
Yep.
that ain't the same." And they're like, "Well, what do you mean?" I'm like, "It's just not the same in most cases. I'm telling you, it's not the same because we have." Rob, edit that out. It's not the same because we have more options. We have more investors. We just have more programs. And a lot of times these retail lenders are just taking on, sometimes they're just even internal non-QM products, or they're just very limited. It's just not the same, man, from my experience. I mean,
It's
every
not.
time they come to me and I say it's the bank statement loan, I got them approved. It's almost like, well, how did you get us approved? This other company couldn't get it done. Why do you think that is?
I think it just comes down to the common sense underwriting that has to take place, right? I mean, it's like when we wrote the guidelines, right? And this is something people should know who is listening to this. We wrote these guidelines. So a lot of non-QM shops, when you log in to their portals, you'll notice there are no guidelines, right? They're just matrices, and you're like, oh my God, how do I figure this out? How do I do this? No, we post our guidelines publicly, and they're very widely available for anybody to look at. You don't even have to have a TPO account with us to be able to view our guidelines. Just go on cakeTPO.com, look at the guidelines, and you'll understand, how our underwriters are underwriting these files, right? You'll get into the baseline of it. So I think what it is that, one, most of these companies that are created that offer these non-QM, they've never really been in the originator point of view. They don't see it from an originator's point of view. And then two, the underwriting isn't really done from a common sense underwriting standpoint, right? I mean, for example, we have a guideline that I love so much. It's, you're doing a rate and term refinance for somebody, right? This person is going to be saving 10% or more on their payments, right? On their principal and interest.
Right.
Why do they need to have reserves, additional reserve? It's a rate and term. They qualified for the loan in the first place, right? They're saving an additional 10% off their current payment. They're going from 10 grand a month to 9 grand a month, right? Why are you asking for an additional 12 months of reserves for this guy?
Right.
It's like, it's just such a simple point of it. This person's going to have many, many months of reserves because of the savings that he's offering, right? We're not giving him any cash. We're not giving him any increased, risk or anything of that sort. We're literally reducing his rate, saving him some money. So just something so simple that we threw into our guideline of, hey, if you have a 10% savings on your monthly payment, the reserves requirement is waived. It's good to go.
Yeah, it makes too much sense, man. Makes too much sense.
Yeah, and I mean, I got to give credit to my underwriting team. We have some incredible people. We have Rich Mango, he's the director of our underwriting team. And every single time, even if there's a dispute on something, like he'll personally, even with the team of 30, 40 underwriters, he'll still personally jump in and look at every file one by one and say, hey, you know what? We did make a mistake. Let's fix it. Or, hey, no, I support my underwriter's decision. They did it the right way. Let's move forward. But at least you'll be able to get somebody who will take ownership and take accountability over it. So again, everything you're asking, it really just leads back to the first question you said and what makes Cake different. And like I said, it's really the people, right? It's the people being able to jump in, be so involved. And for retail LOs that are out there, I highly recommend you see what's out there on the broker space, because it's very, very different than what a lot of the retail, non-QM can offer.
Yeah. Let me ask you this. Do you think that there's any myths about non-QM in the broker space anymore? Or do you think
Anyone? I'm sorry.
any more myths in the broker space about
Uh,
non-QM? Or do you think that they've been mostly, cleared up over the last couple of years?
I think a lot of it's been cleared up, right? So like a lot of times, like I remember hearing stuff about
Yeah.
people saying, "Oh, it's all 2008 all over again," or is this and that. And I'm like, guys, you're comparing a doc type of me using someone's bank statements to qualify, right? And seeing actual income coming in, and putting them at a 70 or 80 LTV to 2008, where you guys were giving 100+% CLTV on neg am loans and interest onlys and all that. Like,
Not
where are
same.
you getting? It's not even close to
Not
what we're
even
talking about.
close. Yeah.
In fact, to even make my claim even more valid, the default rates that we've been able to see are on par with Fannie Mae, if not even more, even lower, because when you do a Fannie Mae conventional, when you do any of those loans, these people are putting as minimal as 3% down, right?
Yeah.
So if they default, really, what are they losing? Yeah, their credit score goes down the hill, but they're only losing on 3% of the equity in their home. Whereas, think about it from an investment point of view. If you put 20 to 30% of your own money into a property, right, into an asset, you're going to do whatever it takes to make these payments, right? Like these borrowers are much more, they're much more sophisticated borrowers. They're very efficient. They make sure their payments are made. The default rates are low. It's a very, very different point of view.
Yeah. I could not agree more because I lived through that time. Man, if you had a pulse, you could
You
get
had a loan.
approved. You didn't even have to have a job. You could probably get a loan, and it's just not
Absolutely.
the same anymore. So it's far from it. And, it's come so far from that, and it's better for the consumer. This is a good thing for the economy.
Absolutely.
A lot of people don't understand that every time a home purchase closes, it injects about $67,000 on average nationwide. That helps boost the economy. And what we do as originators is very important to economics in our communities. So let me run to this next question. What are you seeing the best brokers do in the non-QM space differently? It's helping them win.
I think it comes down to just setting proper expectations.
Yeah.
And that's really what it is. Like they're talking to their realtors and they're telling their realtors, hey, this is a non-QM loan. I want you to understand it's a non-QM loan. As quick as these guys can possibly be, it's a manual underwrite from A to Z. It's
Right.
not a Fannie Mae AUS that automatically tells you, hey, you're good. Just give me 3 conditions and let's move on, right? I wish we're there. I think we're going to get there soon, but we're not there yet. But
Yeah.
in the meantime, there's a couple tips, right? Set proper expectations, right? Know exactly what you're doing. If you're going to be having to work with a CPA, an accountant, an attorney, whoever your referring agents are, whoever's giving you business, you want them to understand the process and know exactly what kind of loans there are, right? Which is why the guidelines are readily available. The matrices are readily available. Read the literature, and see exactly what it is that you can do and what you can't do. And when you set the proper expectations with the people you're working with, everything goes smoothly, especially if you're not piecemealing conditions. I'll put it that way too. So, if you set the proper expectations, you submit full files, and you're able to understand what's going on. And most importantly, talk to your AE, go through the scenarios, tell them, hey, I have this scenario. Are you able to do this? Just that quick 4 or 5 minute phone call where you're talking with somebody on the other end who's dealing with this on a 24/7 basis can clear up so many potential issues for you right off the bat. Might even tell you, hey, KT, you know what? I can't do this without an exception. Let me go talk to Haik, my SVP right now. See, hey, can I get an exception on this? Right? It's going to clear it up for you right away. That way, now number one, I got a loan. Number two, I know I can get this done. Number three, let me set the proper expectations. Let me tell them, hey, guys, it's going to take about 21 days. Here's what I need from you. Here are the docs. Get these over to me. Let's get this funded. That's how you build a success story.
Yeah, I'm a huge proponent of setting proper expectations, and you know this. I mean, we've done enough loans together to know. And my team's tough, man. Like they're rough,
Yeah.
and they're very.
They're great.
Yeah, well, yeah, they're good. They're very good at what they do, but sometimes they get a little, mean sometimes. But
It's part of the business.
yeah, it
You got to
is.
have a thick skin in this business.
Yeah, that's for sure. But anytime that we have a non-QM, there's different levels of a non-QM client. There's ones that are cookie cutter that you can look at it just from experience and be like, oh yeah, that one's going to go through really simply and easily. Shouldn't have much problems with it based on my experience with non-QM loans and the investor relationships that I've built. And then you'll have some that are maybe a little bit harder. And those are the ones you really have to pay close attention to. And a lot of times it's better to get them in underwriting or to get your AE to look and underwrite the income and, get a soft pre-approval, right? Or
Absolutely.
even a solid pre-approval, and go ahead and do the work up front before even a contract's written. Sometimes
Absolutely.
I've been able to do that. And then a lot of times I'm saving the deal from another lender who dropped the ball, was going traditional. It's not going to go for whatever reason.
Bailing out the other LO.
Yeah. And then bailing out the other LO. And then, a lot of times if I just think it's one I can get done, I don't have enough information at this moment to really determine how quickly I can get it done. A safe play is always 45 to 60 days. Now, with that said, that does not mean that you guys don't close them in 30 days, because you've closed a lot of my loans in 30 days or less. And it's definitely there. But that's what you mean when you say set proper expectations.
Yeah. I mean, I think set proper expectations as in letting people know exactly what the whole process entails. Right.
Yeah.
And then most importantly, you're right. 45 to 60 days is great. Maybe a little on the more conservative end, especially with us. But I think right now, like the other day, we just posted on LinkedIn, we did a broker submitted in again, situation like yours, like you said, where they're bailing out the other LO, submitted a full package, had the appraisal, had everything in 5-day CTC, so clear to close in 5 days because they gave us everything up front. There wasn't any additional questions that we needed. So I wouldn't say that 5 days is the norm, nor would I say 45 to 60 is, right? I would say we're roughly right now between on our average turn time. If I look at it right now, we're at about 20, it says 23.5 right now is our average. So we would be start to finish on an average of 23.5, which I think is still, especially with non-QM, super aggressive.
It's great.
We did, and we grow as our brokers grow, right? So the more business our brokers give us, the more we're hiring on our end to support these brokers, right? We're not trying to do a momentum chase where we're like, okay, let these loans fund and then we'll grow. No, as we see, hey, volume is picking up, or we anticipate it with, rate cuts happening mid-year and the end of the year, and all these different economic events that are happening that should be, triggering, some catalysts for refis, especially in volume increases. We hire ahead of time, right? So like I mentioned to you, when we started, we were like a team of 30 to 50. Now we're at 250 plus, and we keep growing and we keep hiring. And, we love to hire great people and great talent. So I think we'll do everything in our power to make sure that ops is as smooth as possible, to make sure that even when you set proper expectations, we can deliver, way above and beyond the expectations.
Yeah. I love you guys, man. I do. I really do. I love working with Cake, and you couldn't have said it better. So, also, if you're a good loan officer, putting good loans together and getting them all the information that they need, then you're going to get a better result. You know how it is. If you throw it up against the wall and hope that it sticks, it's probably not going to be a great result. So you got to be a better loan officer.
Seen those before.
Yeah. So, all right, I got one last question for you. This is what I like to call KT's signature question.
All right.
I've got a lot of retail friends, and they're always asking me, hey man, how's the broker world? How's the wholesale? And so if you knew of if a retail loan officer was considering making a move to the wholesale side,
Okay.
what would you tell them, or what piece of advice would you give them?
There's 3 words that I love to say. Brokers are better, put it that way, right? And here's why. You, as a broker, you're not just doing what's right for you, you're doing what's right for your customer. You're giving them options. You're giving them choices, right? So I tell all my retail friends, and I still have a couple till today that are still on the retail side, like, it's great where you are, but if you really want to make a difference, come to the broker side. See what it's all about. On the wholesale and broker side, you're able to see variety of options that might not exist for you or your customer. You'll be able to say yes more often. You'll be able to win more often, right? And on top of it, you'll be able to make a brand for yourself. Being a broker like KT, if you're working for a company like, anywhere else, your brand is really the retail company you work for. But KT, you as a loan officer, the independent LO you are, KT, you are the brand, right? So I tell my people all the time, you want to be in this for yourself. You want to be the best you can possibly be. Switch over from retail, look into the wholesale side, I think, or the broker side. I think, if anybody were to ask me which side I'd be on, I think the answer is pretty clear. I'd always say brokers are better. and I love the broker side.
Man, I couldn't agree with you more. And hey, I feel like a customer again. I feel like a customer again. That's where I wanted to be. Where if someone wanted to connect with you guys, Cape Mortgage, where would they go to connect with you guys?
Absolutely. You can reach out to us at info@caketpo.com, or you can go straight on our website. There's a broker package button on there. You'll be able to download a broker package and send it in. You'll see our phone number on there as well, our email address on there as well. You can give us a call anytime. Our lovely front desk will pick up and direct you to right to the right person. Or you can always just reach out to me anywhere on LinkedIn or email us, and we'd be more than happy to reach back out to you.
Awesome. You can also go to the AIM website. It's the aim.com website. That's obviously another place you can go as well. Brother, I appreciate you guys. If you're listening, and gals, if you're a loan officer looking to expand your business, this episode might just be the sign that you've been waiting for. Until next time, we'll see you again. Haik, appreciate your time, my man.
Appreciate you, brother. Thank you.